All right. Hello, everybody. Welcome back to another episode of Finance Junkies. We're doing Wednesday this week because I can't make it tomorrow on Thursday. So we are here. We are live. And
So are you spending the weekend at Vlad's house? Is
no,
that what's going on?
I'm going to New Orleans. I'm going to the French Quarter for the first time as an adult. So hopefully that'll be fun.
That's who are you going with?
My boy from college, his bachelor party is there.
Hold on.
It should hopefully be a good time. I haven't had been.
Bring the worst pair of shoes you have because they are going to be absolutely fucking garbage. That's how dirty usually the place is.
Is the French Quarter like? Is it what it people?
I was just there for work actually, but we did spend a night there. Yeah.
But is it hype? Is it actually fun? Like, is it?
24/7 party. If you're into that.
Yeah,
absolutely. It's totally happening.
Make sure you go to Drago's and try their oysters. It's amazing.
Yeah, they're known for seafood, right? Louisiana. Like,
yeah.
Is that the expensive one? Oysters. Is that the expensive one though? Drago's?
No.
Okay.
No. It gets busy though. You have to be there. Like, expect to spend a couple of hours on the line if you don't get in at the right time. But yeah, it's really good. Like, it's charbroiled oysters with like Parmesan, and me and the wife, we had it. It was great.
They are delicious. We had like 600 on our trip there.
Dogecoin, by the way, is at 20 cents right now. So that's definitely
mothers. Yeah, I'll tell you. I'll tell you a funny story after the pod. There's some stuff
about New Orleans.
New Orleans.
Okay. All right. So yesterday, big day for me personally. I got to go to the Robinhood event, the gold event. Vlad was there presenting. So I want to talk about the event, but I want to talk about the actual announcements first. We're all investors. So like when a brokerage announces a bunch of investing features, all of us probably have some thoughts and opinions on it and what that's going to mean in the broader investing landscape. Big two announcements. They're going to give you 1% on every deposit you put into the platform. So you put in $1 million, you get 10,000, and 3% cash back on their credit cards. How big were the announcements to you guys? Stock went to $20 today. And do you think the street is going to respect it as they show more users probably coming over the next few quarters? Let's start with KRIS, then we'll get to VITALY. But
I think overall the company is executing very well. They understand what they need to do to capture the minds of the younger people. I think the takeaways that I got from this, and not just the cash backs and all that stuff, that's window dressing in my opinion. It's more important that they try to get this all-encompassing youth market into their platform. So this way they can provide banking / investing / retirement services at a wholesale level, especially among the younger crowd. Because if you think about it, the older people, they're set in their ways. They're not going to be changing out of JP Morgan. They're not going to be changing out of their Bank of America. It's really hard to convert them to use Robinhood. On the other hand, the youth, they want a lot more instant gratification. They have this innate need to do everything in a very fast pace. And Robinhood provides that. And their UI experience is probably the best. I mean, I have Fidelity because just a wide variety of investments I can make in Fidelity, but I still use Robinhood because it's just clean. It's very easy. I can look at it, whereas Fidelity is a little bit more of a professional investors kind of platform. But if you're trying to just have a very simplified feature, you can do that. And so I think eventually, the broader market is going to be the younger people. So probably the 20 to 25 demographic is who they're going to be targeting with this new credit card. People looking to build up their credit, people looking to invest for the first time, and they don't have a robust physical footprint, but that also means that they don't have those additional costs that they can then use to pass on to their clients. So if you think about JP Morgan, how many buildings that they have, how many physical locations that they have, and they do provide good traditional services, the younger crowd who are not necessarily in the market or actually need all those services, these guys could provide. I mean, I think they're doing it right. I mean, if you were to compare them to SoFi, I think these guys are absolutely killing it compared to SoFi.
VITALY, your take on the announcements?
After watching the event, I did watch it actually while driving. I was watching the event, and
are you at FSD driving you? That's how you were able to watch?
It's autopilot. I didn't have FSD. Autopilot was driving me, and I was watching the event. So anyway, I was like, "Oh damn it! I invested in the wrong guy. I should have went with my boy Vlad." My Russian boy Vlad. That's who I should have went with instead of Noto, that fucking loser.
Okay, he's not a loser.
He's fine, but you can tell, like, just, like,
There's a
if you
difference
were-
between the product execution on those guys.
just the way they're even presenting it is so smart. Just like,
Yeah.
how come SoFi can't do something similar to at least present it to the public? And honestly, I just got the Robinhood account, and yeah, I mean, I think they have a good product on their hands. Bottom line.
Yeah, I think product execution was huge, and presentation of it was huge. This is the first event they've ever thrown, and you would think they'd done millions of events. It was professional, smooth, everything. So I thought.
Well,
it
the
was
3% too also got me. So I didn't get the credit card yet, but I am going to get their credit card because look, 3% is free money. Like, and right now I actually have M1. I don't know if you guys know about M1, but I have their credit card. I have their lending products. So I use M1 a lot and I like them a lot. They charge you $75 a year, which is similar to what Robinhood charges, $5 a month,
Yeah.
$60, whatever. They charge you for the year for the to be treated better, basically. And they give for some things up to 10%. So like I use Home Depot, they give 10% on their credit card. I think it's for Home Depot and a couple of other things. That's a lot, like 10% back.
Yeah.
But it's only a few things. To get 3% on everything, I mean, that's just like a no-brainer.
Carlos.
I think I watched the event too, and I think with all the talk of the card has sort of taken the narrative, but I don't think you can understate the advancements to the UI. I think if the card wasn't there, we would be talking more about these advancements in the UI. And I've been really thinking about this. I was kind of stalking X last night, watching the SoFi Robinhood argument, and I'm sorry, guys. I think SoFi and Robinhood should have probably merged, and I think now SoFi is going to get slowly eaten by these guys. Look, we talk a lot about financial education. Robinhood is uniquely positioned to educate this younger generation in the investing. Why? Because they're an investment app first, and then you have your deposits coming into it. So when people are on that app, you have an investment platform where your income is coming in, and you are seeing how that income is being dispersed.
Which is basically functioning like a bank without having to be a bank.
Functioning like a bank, which is very different than SoFi, which on the deposit side with the investment products after the fact. I think just Robinhood, the nature of the app, that freaking interface, it is uniquely positioned to capture the attention and the interest of the younger demographic, the younger market. So I think this is the beginning of a multi-year growth period for someone like Robinhood. Now the credit card itself is really great. I love the homage to Steve Jobs.
Oh, that was good. No, so when I was
like, it's this.
I was front row and I saw that, and so Vlad kept looking at me, like he kept making eye contact with me. I think it's one of those things.
Behind you with your hair.
Well, yeah, everyone saw that. This is why I wear a hat so much because my hair's crazy. We talked for like 5-10 minutes before he got on stage, so I think he got kind of friendly with me. So then he kept, when you look at someone in the audience just to like kind of sometimes like a familiar face, he kept doing that every couple seconds.
Maybe he's judging how the event is going by your
right. And me, I'm hype, so I'm nodding along. I see these three cards, and I see these three cards, and in my head, I'm like, this is a fucking stupid idea. And then he looks at me, and I'm like, yeah, fucking great, 3 cards, let's go.
Watch it. You're thinking of your call options.
I'm just like, yeah, the 3 cards. But in my head, I'm like, why the fuck would you have a gold card? Like, it's the elitism. It's so weird. And then I finally got what he was trying to do, and I was like, oh, that was good. That was good.
So you never saw the original Apple Steve Jobs event, obviously.
No, I did. I know. I know, but I didn't get it immediately. It took like 30 seconds.
You started saying that in the way that they laid it out. I thought that was cool. It was a nice.
Are you starting to get it?
Yeah. Like, oh. But I was nodding my head because I didn't want him to like think I didn't like the product. But in my head, I'm like, this is stupid. Why would you have 3 different levels to a card? But it was good.
Oh, and the long and short of it is, I think it's going to bode very well for the company, even apart from the gold card. I just think. So
today he said they got hundreds of thousands of users in the first couple hours for the credit card. He said that on Yahoo Finance today.
Makes sense.
I mean, dude, the reason this thing exploded like 8% last night, I know it dropped a little bit at $20. I think the street's like, wait a second. They got 3.5 billion in deposits in January, 3.5 billion, 3.6 billion in February. In the next few months, if all these people start paying $5 a month, which is like 95% margin for them, start taking their cash backs, bringing it into the platform, and then just start dumping money because they're getting what place is offering you 1% on every dollar you put in. These deposits might explode, Robinhood makes a shit ton of money off deposits. The trading volumes are going to explode. The retirement account went from 1.5 billion to 4 billion in 90 days. It took them 12 months to get from 0 to 1.5 billion. They announced it this morning as well. I just think this is going to be a product that's going to have a lot of assets under management. And Robinhood.
So where are they making all their money first of all? It's from the trading, right?
No. So they have two streams of revenue. One is transaction volumes, which used to be the majority of the revenue, but then interest rates went up and everyone thought they would die because they were a zero interest rate phenomenon. And then Vlad, who's a product savant, was like, wait a second, if the Fed's giving us 5% rates, that means we can give a 5% APY. How do they do that? They partner with a bunch of banks. They take like, let's say they get $3 billion. They give it to the banks. The banks make a spread. They make like 5.4, 5 point whatever. Robinhood makes a tiny spread off the commission that they give to Robinhood for giving them the money. And then they give the majority of that 5% APY to the consumer. So now they're giving you 1% on top of that.
But what happens when rates get cut?
It doesn't matter.
Maybe get a rate cut in June.
No, it doesn't matter. The unit economics stay the same. The APY changes. So if people want to leave because Robinhood goes from 5% to 4.75, it's like, okay, but who else is going to give you 5%, right? Everyone's going to come down.
I mean, first of all, once you've transferred your retirement and your accounts, I mean, leaving that takes a long time.
Yeah.
You don't want to do it again for a long time.
But also, if you think about it, you've got the retirement accounts, good incentives there. You've got good deposit incentives, plus you have good investing, right? So you're basically capturing that customer from the beginning of their investment journey on through retirement.
Yeah.
Right.
Yep.
To your point, Vitaly, once you're in, it's a pain in the ass.
Yeah, we're still in SoFi.
As long as they don't fuck up, you're probably going to stay with them, which means you've captured that customer, say, for life.
Yeah.
Keep doing this and fast forward 5-6 years. These are things you have to look at their
So my point is, how do they make on the 3% that they give you? How do they make any money?
So that's the cash sweep product, right? So they take your uninvested cash, they put it into the
No. 3% they're giving you for your IRA. How are they making any money?
Well, when you put in the money into the IRA, they're taking that money and they're investing it in their banks, and then they're making the commission off that. And if you trade, they make payment for order flow off that.
Hold on. So, I thought if I transfer my IRA, let's say $100,000 worth, right?
Yeah.
That's into the same equities that I had. I just
so
my IRA.
For that, they don't make any money off you, but they keep you on the app. So then you buy other shit.
They give you 3%. It costs them. That's the acquisition cost, you're saying.
Correct. Yeah.
Okay.
So I moved my IRA $100,000. They give you 3% on that.
They give you $3,000.
Yeah.
Yeah.
And then,
I mean, Fidelity's not doing that.
Well, yeah, but Fidelity also gives you access to way more investing products than Robinhood does. One of the things that the limitations on Robinhood, and the reason why I personally wouldn't move there, is a couple of things. And they had a general ask question a while ago. Why people don't use more Robinhood. I'll tell you why. One is you can't do lot sales. So when it comes to selling,
you can't do
explain what a lot sale is to people who don't know.
That sucks.
First in, first out.
So that's what Robinhood does. But usually, if you want to be a very tax efficient investor, you want to be able to do lot sales where you can take the lots that are most likely to be tax beneficial to you and sell those, as opposed to the ones that are more, not as beneficial. Same thing when you're trying to harvest losses. You could use the ones that are more near dated, that you can use that year, whereas the longer dated ones you could just leave alone. So this way, there's more chance of a higher recovery, plus you won't have to deal with the long-term capital gain. So you have to be very careful with that. So that's one thing. Another problem is there's a lot of equities that require a little bit more, I don't even know how to say, just a little bit more advanced knowledge. You can't do any of those things. Like you can't do preferred equity. Like I'm buying up some preferred equity right now. I can't do it with Robinhood.
Or corporate bonds.
Relegated to
right.
Corporate bonds. You can't do municipals. I mean, you could do theoretically these days ETFs that kind of like mirror it. But if you're looking to be a very selective investor, you can't really go that route. But I found something way more interesting during your whole meeting. Where was the meeting?
Today it was at the New York City event. Where was it? It was in Madison Ave or something. It was at some private space that they had.
Right. One of the things that I'm starting to notice, and I keep harping back to commercial real estate, because
I was going to say he wants to know the building, the
in person.
It was packed, dude. It was packed.
Yeah. Sure. In person meetings, in person conferences. They're back in flavor again. Here's the thing: he could have just done a live stream, right? Didn't have to invite people physically. Blah blah blah. So what's going on is and this is the part that I think a lot of people may be missing in the general market. There's a lot of reports out by the media that says office space is dead, but office space is not dead. Leasing rates are coming back, and they're coming back stronger than ever right now. And premium grade A space, which you were probably at, is actually a lot more finite than people think. So I think the real opportunity, I mean, even though this was a Robinhood event, I'm seeing a lot of companies doing physical meetings again, which bodes really well. Because if you look at maybe not even two, maybe 3 quarters ago, a lot of events were like virtual only, remote only. They weren't done in an office, pre-recorded. Now everyone is going back to doing on-site physical stuff again. So very interesting.
Q1 is going to be sick. That's going to be an interesting.
Well, Q1 ends in tomorrow, so I don't know how much yesterday's announcements will affect Q1, but Q2, I mean, dude, it's...
Well, when do they report? Because Q1 and now you'll have some information. They'll probably give you some more information about.
Yeah, I mean, they report in like late April, early May. But the gold subscribers yesterday probably went up by.
I want to look at the deposit, Robinhood versus SoFi.
So SoFi last quarter, if I'm not wrong, they brought in 2.9 billion. Robinhood brought in 4.6. That's the thing about the Robinhood SoFi thing. It's like, so I saw a lot of people. I haven't commented on it.
The question is, why would you, if you're a new user, why would you pick SoFi over Robinhood?
Well, that's my thing. So
invest, right? If you have a direct deposit and you want to invest, why would you then pick SoFi over?
Yeah, I mean, so I saw a lot of people commenting about it. Obviously, we're in a big SoFi community, and there was a lot of stuff to say. I think the thing people missed that went super deep on SoFi versus Robinhood, because I had this debate for 2 years now in 2020 when Robinhood was $6 and SoFi was $6. Like, this was the debate. UI, user experience, is the moat, and everyone kept saying it's not a moat. It's like it can be copied. And I think the SoFi people didn't understand that product experience in today's attention economy, where our attention is so fleeting. Like, if you can't keep people's attention, how are you going to get the deposits? How are you going to get them to do an automotive loan with you? Like, you got to keep their attention. And Robinhood is a product.
Think about this across all your social media platforms. Every time you see a picture of a stock ticker, what app is it?
It's
I've never even seen a screenshot.
Well, but see, but this is the thing. SoFi, to me, I don't even like comparing them because SoFi is a lending business. It's a bank. Robinhood is a brokerage. The problem is the debate has become SoFi is the one-stop shop for doing everything, but the product is nowhere near that velocity. But people want to use that as the comparison against Robinhood. But in reality, their revenue is from lending. So to me, I don't even know why we do the comparison. But if SoFi's top of the funnel is, oh, we'll get you to invest and then we'll upsell you on all these loans, it's going to be harder filling that top of the funnel if people go to Robinhood, right? Because they're just more excited to go there.
I know you're saying it's all app and UI, but honestly, it looks like just Vlad is better at executing.
I don't know about that. SoFi's numbers are amazing.
Business,
but SoFi's numbers are amazing.
Strategy.
What app do you like better? Vitaly, you have them both. What app do you like better?
No, SoFi is a terrible app.
No, but the thing is, SoFi's numbers are incredible. Revenue growing 37% or whatever.
I don't see how, honestly. I mean,
but it's being valued like a bank. That's the problem in the market.
Yeah. I'm saying it's not. I don't use it. I don't use it every day. I could see using Robinhood every day.
Yeah, I think Robinhood's being valued like a tech company, even though they might not be a literal tech company. SoFi's being valued as a bank, even though they're growing.
And I'm saying this as a SoFi shareholder, by the way.
Me too.
Me too.
So I have more SoFi than I want to admit.
I'm just I should have had more. I should have had half and half.
$15 by the end of the year.
I would bank on Robinhood eventually going the route of a bank and actually providing more banking-like services. I mean, if the all-encompassing goal is to disrupt traditional finances, which is what Vlad is talking about, then yeah, I mean, it's the same thing. Use your experience in building out this app that originally was for trading stocks, build it out to be a banking-like app, but do it.
Well, so Chris, what do you think about this? Because Vlad has talked about publicly that being a bank charter comes with too much risk. They would have to get rid of crypto, all that stuff. So I don't ever think they'll become a bank. But if they're functionally doing what a bank is, like I don't put money in Bank of America. I get paid and I put it into Roth. If that is my bank, isn't that all of the upside without any of the sort of downside risk, which is a really good business model?
I'm not sure. There's a lot of complexities that banking has that you have to apply, and the bigger you get, the more regulatory scrutiny you end up facing. So
that's why I think they won't. That's why I think they don't want to be.
The goal here should have been, I told you, and this is what I put on Twitter. Some people agreed, some people didn't. that a partnership for something like SoFi and Robinhood would be marriage made in gold, where basically, you know, Robinhood users could benefit from SoFi's banking products and lending products, right? And SoFi would essentially just give up its stupid investing platform, which is probably the dumbest thing. I swear to God, man, it was the worst decision I ever made. Except for one thing, I didn't sell anything because their UI was so terrible. You know,
Dude, I tried to sell something, and you have to like swipe like vertical. I was like, who came up with this decision? Horizontal swipe versus it.
And it does, and it just looks garbage. So
That's
it
patents.
wasn't. Yeah.
Probably
The point
patented.
is, they could have had a pretty strong partnership between the two, where each one feeds the other. So SoFi with its bank charters and lending products could have been the, you know, the banking portion, and Robinhood could have been just the invest portion. But then again, I don't know. I don't know how all of this.
Do you also
would end up
think
panning out.
Noto not being a founder is?
No.
I don't think so either. Like I know Vlad is a founder and this is his baby, but Noto's he executes, right?
No,
it's
I
not
don't
like,
think so.
I think that does matter, by the way. Absolutely.
But how
But
much does
it's
it
not
matter?
going to make. It's not going
Matters a lot.
to. You think it's going to matter? It would matter enough that SoFi would be in a fundamentally different place if they had a founder as opposed to him.
Someone like Vlad, Elon, Jobs, those people who they just care so much. That's all they think about all day long. And no, I'm not saying he doesn't care, but I feel he's a business guy. He cares.
Noto was
for
a
business.
banker. He worked at Goldman for a long time.
Yeah, this
he's
is
not
what
a
I
product
mean.
guy. He's not a
Yeah,
product guy.
he's not the same as Vlad in terms of that. I think Vlad is doing a much better job as a CEO.
Okay, let's do it right now. Put it on the record. What is your end of year price target for SoFi? What do you think it can actually get to end of the year?
15.
Maybe 5.
Okay,
It can get to
be
5.
serious. Be
He's
actually
like, if they
serious.
try really hard.
I think 12. I think 12. 12 is my low end. 15 is my high end. If they're not 12 by the end of the year,
Yeah.
there's an issue. But I think they get to be 12. Chris, what do you think?
I think they stay range bound, 8 and 12, somewhere between there.
Vitaly,
Very
seriously.
yeah, I do agree with that. Somewhere between maybe 5 and 12. So I could see them going lower.
Oh, I finally found it.
But by the way, I'm not chasing anything, meaning I'm not selling my SoFi and going straight into Robinhood. I think that's a bad.
I think
move.
selling at this point is stupid on SoFi. It's too.
Just
If you want,
Just
yeah, it's
hold
already on the lower end of the range bound for me anyway, even if it goes to 5. But chasing is a bad idea if you're like, oh, I should get rid of this for the other thing.
Yeah. Yeah.
If your thesis is wrecked, maybe, but I don't think the thesis on SoFi
I don't
is
think
wrecked.
it's right.
I just think Vlad is a better CEO in terms of executing, and being a founder is important.
Real quick, a feature of this card. Now, Apple does this already with Apple Pay, but I've never actually used it. I don't know if you know. So on this new Robinhood card, this is the thing that I said I'm immediately getting this card. In the app, you can create virtual cards that will allow you to sign up for other services that will automatically cancel at the end of
It's really
the
cool.
expiration period. So I work with this company. I was getting some stock footage, I was getting some motion graphic templates for this project. And so I signed up for it, and it was like a $49 monthly charge, and then you can download as many as you want. So I did it for a month, and then I got what I needed. And I didn't realize for like 6 months this thing was still charging me $50 a month. I finally canceled it, but something like this would just make it super easy. Now, again, Apple already does that with the Apple Card, but something about the way you have it on the app, you create a card, you say what it's for, set the expiration, use the card, boom. That's going to save people a lot of money. So
yeah, that is a big thing. I actually use a service called Privacy. I don't know if anyone has heard of it. There's privacy.com.
They do the same thing?
It's free. You can create all the cards you want. The difference is it's not a credit card. It connects as like a debit card, and you can create whatever you want. So yes, anytime I sign up for anything online, I just say, okay, this is a one-time charge in the app.
Exactly.
It's the one-time charge. They try to charge it again, and I've had people try to charge different cards again, and it denies it, of course, and it shows up as denied. You know.
But that's,
really useful.
That's a really, really useful thing. That's just making a card that's really, really useful. I'm sorry.
Yeah.
Dude, this is just beautiful, dude. I mean, this is where product matters. Like,
well, okay, but that's Apple. They're copying Apple.
They're copying it, which is good.
Let's give Apple the credit.
Sure. Copy the best. Why not?
Give Apple the credit.
They were like, well, you got the white. We're gonna go gold.
The one thing I care about is because I have a Chase as well, a lot of Chase cards. I'm hoping they tried. I heard something that they were going to try to match this, but I don't know if that's true.
Maybe if they do, that's great. I mean, that's great.
That would be amazing. Then I don't have to switch all my cards out.
So can we pivot to something?
Yeah, go ahead. You got it.
So are you seeing like a record number of people whose opinions you trust going to cash and holding cash now.
Yeah, let's talk about this. So
You see that?
Meet Kevin is getting very bearish.
Jeremy's
And-
getting bearish. Warren Buffett's getting bearish. Jeremy.
Oh,
Jeremy's
Jeremy's bearish? When did every video he's like, buy the stock now. What are you
2
talking
days
about?
ago, he's like, I'm holding a lot of cash.
So I got home last night at 3:30 a.m. I was dead tired. I threw on a Meet Kevin video and I got like 2 minutes of it. And in those 2
I
minutes,
got some lotion.
yeah,
Oh,
I got the
God.
fucking lotion. Yeah, I was like,
He's like, I'm gonna meet Kevin tonight. Yeah, boy. He's coming over. So is everybody in cash? Is everybody going to cash? Because Chris,
hold on.
2 days ago was like,
in that video, he said that he got rid of his Tesla because he thinks Tesla's going to crash, and he's getting annoyed that he's getting so much pushback. Here's the question. Do you think it's fair that the stock that made him famous, that community has turned on him pretty aggressively because he liquidated his Tesla? Is it fair for that community to hold that against him?
I would say no, and I would say because he's running PP, which is a public ETF, like he has other responsibilities, and these children who think he doesn't is ridiculous, honestly. So I would not hold this against me, Kevin, at all, that he had to sell out in order to protect his investors.
It's actually annoying, and it's a bit cringy seeing how. Well, we've been through this before, but as Tesla increases the market cap, the way that the bulls respond when we're in these sideways trends, I find myself having to mute some of these people. Like, I can't stand sometimes how the Tesla community comes out. It's the same complaints that I had about Palantir community early on. Any one of these communities that comes around a company, it's just too easy to get into an echo chamber and basically block everything out. And then actively attack people, say like a Meet Kevin. I don't know. I'm not liking it.
It's because, their bags are loaded and they
Okay.
bought into the dream, and now someone doesn't believe in their dream. So it's really obnoxious.
Yeah, but like it's like every 6 months we revisit this. Now all the arguments about FSD and the bot and Elon.
Here's the thing.
I don't want to talk about it.
Tesla's pumped the past week because FSD is like giving signs of life. But Dan Ives lowered his price target today to 300. Every analyst on the street said, yeah, they're probably going to do maybe 420,000 vehicles because China delivery came flat. So if they fuck up Q1, I don't know if 12.3 is enough to save this thing. And that's what I think Kevin's thinking. But the Tesla bulls are like, no. We're back to good. We're like at 180. We'll chill here. Kevin's thinking we're going to 140.
If you're holding a decent sized Tesla bag and you don't want to buy anymore, then that's it. You just ignore the stock. It's like it's in your IRA. You just ignore it and you wait the 5 years and you get whatever. If you don't have enough, then you use this place to accumulate, right? And you just continue to build out the position. I just don't see what the issue is. Q1's probably going to be bad. So if you want to pick up some more, you're going to have an opportunity. And look, the analysts are chasing the price. Their price targets are chasing what the current news is going to be. And in the next 3 to 6 months, does it look like it's going to be good? Probably not. So people just need to chill out and not attack Kevin. Kevin didn't cause the company's issues. Even Tesla's not completely responsible for all of the issues. Just chill out.
Chris, what do you think about people kind of turning bearish right now? I mean, you think inflation is coming down aggressively, but markets at all-time highs. I mean, how do you make sense of this?
I mean, valuations are high too for a lot of companies. So, I mean, it's normal. But
what's your
with
cash
regards
position right now?
Not much. I told you I'm heavily loaded up on commercial real estate, but for the most part, it's in a part of the capital structure that's a little bit more safer. So even though it's not technically like cash, to me it feels like a cash-like position because I'm getting a good return on it and it's bottomed out. So there's really not a lot of room for downside. So yeah, I'm just pretty much chilling right now. I will say that right now is a time to take some risk off. I do agree with that sentiment. But it just depends on which sector you're talking about.
Yeah.
So in terms of like AI and big tech and stuff around there, I mean, there's companies that are forming bottoms in that sector, and then there are companies that are at valuation highs. So you just have to be very judicious. This is not everything. I think this is much more of a stock pickers market where you just have to be very careful what you're buying. Also, remember, don't buy things at the top, because if you buy things at the top, you will underperform for the next 5 years, maybe even 10. I mean, what was Tesla's all-time high?
414.
410. Yeah.
414. 410. Okay. So literally for the last 4 years, 5 years, every holder of Tesla has underperformed the market. So it just goes to show that you have to be careful with entry prices.
I think to be accurate, it's 3 years. And in the last 5 years, everyone who's held it overperformed the market.
Yeah, but that's a very
Mm.
few majority of people, dude. Like most people bought in at 300.
should probably
No,
you
no,
should
no.
you should do the math. You should do the math and go backwards and check. I mean, everyone who
I should do
calls
the math. I see the math in
You
my
should.
account. The math is pretty
Yeah,
good.
but you got in 2018, my guy.
That's what I'm
Like,
Yeah.
saying. 5
most
years.
people
Well,
got in 2021. You don't.
Right.
Not everyone was
That's not
smart
true.
enough to get
No,
in.
no,
It.
2020
anyone who bought the top
2020
top.
people, hold on, 2020 people were buying, and that was before a 5-to-1 split and then a 3-to-1 split. So you have
Mhm.
15 splits.
When you say people were buying, that was not as many people that jumped in 2021 when Bitcoin was at 69.
I don't want to. I don't want to.
Institutions, I'm sorry, but that's institutions. I don't know very many retails that are like bag holding these deeply red positions. The people
I
that
think
bought
there's
them-
tons of
I think there's
retail.
tons of retail that's
You think
back
so?
to split.
Okay, I don't.
I'm sure there is,
Yeah.
by the way, but I don't
So-
want to. I don't want to
so
divert
if
the
you-
point. Your point is
so if
valid if
you-
you look at a shorter time period. Yes.
Right. If you look at this is the point that I'm trying to make, especially with companies like Nvidia and everything else. So right now you're looking at a inflection point where you're probably closer to buying a top rather than buying a I would say a performing company. So you just have to be very careful. Like in 2021, you had soft credit. You had all this hype around electric cars, EVs, and everything. So yeah, Tesla was outperforming sales, growing like crazy. And then what happened? It just, came back all the way to what it is today. And you've basically underperformed. It's the same thing with a lot of people that bought companies in 2021 that had just IPO'd, including Snowflake. You look at Snowflake at one point, it was like, what is it? Almost 300 something.
Yeah.
What did it IPO at again?
Okay, but I mean, to be fair, the deliveries grew from 2020.
That's fine. That's
Every
fine. It doesn't. So here's the thing. It doesn't matter if the company grows. What happens is it'll eventually grow into its valuation, but it takes a really long time. So if you overpay for something today, you're gonna have to wait until the company gets to the point where that valuation makes sense again. Right. And that may take a while to get there. Whereas if you buy something that's undervalued, all you really needed to do is just go back to the mean again. Right. So just keep that.
That's
in
the
mind.
question: if Tesla's undervalued or not.
Uh,
That's the debate.
Yeah.
It's a tough.
Well,
debate.
besides that, I do want to add something to it. So sometimes certain companies, and I'm talking mostly about Amazon or Meta, when they hit their all-time highs, people think there should be a pullback for those companies. There usually isn't. So as Amazon goes to 188, which will be its all-time high, I'm pretty sure there won't be much of a pullback happening. I'm pretty sure that we're going higher. And that's because you're buying a great company, and people understand that. Everybody's front running that trade, obviously.
Yeah.
So it's pushing against 188 right now, and it seems like, oh, it should tank, but
Well, there's a couple of factors to remember when it comes to companies like Tesla and Facebook and all that. That a lot of them, they're driven usually by two things. Top line growth is a big factor, but what you're seeing is these companies now have returned back to profitability mode, where they're actually a lot more efficient. They made a lot of changes internally to become more profitable and then to use that excess cash flow to buy back shares. So technically speaking, it's like if you look at the float is shrinking at the same time. One of the reasons why Meta was such a great investment in the 80s is because it was very undervalued compared to its cash flows. But if Meta hadn't made the changes necessary by laying off a quarter of their staff, reducing down headcount, reducing down office space, reducing down everything, Meta would be at $100 right now. So the key to a lot of things, you have to definitely research things individually. There's no cookie cutter formula that you can apply to a single, that you can apply to like the broad market companies and say, this is the reason why this company is going to do well and, blah, blah, blah. So someone was asking me the other day, it's like, Chris, what are the key metrics that you look at to figure out if a company is undervalued or overvalued? And I'm like, well, that's a very like nuanced question. There's valuation in terms of that sector. There's valuation in terms of what their growth is. And then at the company level, what are they doing to boost up their profitability, their cash flows? So I'll give you an example. A lot of people left Verizon for debt at 30. And I was like, okay, let's take a look. And so a lot of people were focusing on their debt, but they weren't focusing on what all the measures that they were taking in order to improve their situation. And once you see a company starting to make that move and pivot, then it becomes a very valid investment to make. So
So it's
you just
basically
have
saying
to,
if they don't do the
yeah,
pivot, there will be a pullback. And Meta did a pivot, Amazon did a pivot,
yeah.
Google did a pivot, but
You
This
have
is
to,
Tesla has not done the pivot.
look. This
you
is
have
somewhat true. This is somewhat true. You're right about 50% of the time, but sometimes when a thing is off to the races, it works off of momentum alone, especially as it's hitting all-time high. It works off of momentum. So right now, I'm pretty sure Hood will end up going higher than it should be valued at. Maybe even now it's happening. That doesn't matter. The momentum is on its side. So things that are going up tend to keep going up until they actually stop. And that happened with SMCI. That's happening with NVIDIA. That's happening with a lot of companies. So once they're off to the races, I think you should, if you think things are overvalued, they can get way overvalued as we see. And
I'd
then you miss a
say,
lot.
yeah, I'd say when it comes to valuations, do the research where your tech. So once again, we have to keep saying this over. Technicals tell you when to buy, fundamentals tell you what to buy. If a company is fundamentally improving itself, making all the right decisions from a business standpoint, that's a company definitely to take a look at. But then also on top of it, you should layer on technicals to find out, like, okay, is this company overbought? Is it oversold? What is it in terms of valuation relative to its peers? All these things have to be judged together. So it's kind of like a yin and yang that you have to combine together. So I think right now, a lot of people, they get, when they're doing their automatic investing, and this is why I think AI cannot win in AI investing, is that there's just too many fundamentals that you have to like juggle with in order to really get a deeper understanding for where a company is going to be headed going forward, you know. And then there's, of course, there's math. A lot of people just don't do the math. I'll give you an example of some people are like, Apple is dead, their growth is topped out, blah blah blah. And I'm like, you do realize that they're buying back $100 billion in stock every year, right? Even if their top line only grows by 5%, they're buying back a significant amount of their float. If you compound that float buyback and go out 5 years, you can see that this is actually going to be a good performer relative to the market. So, you know, it's one of those things. Yeah.
Let's talk about this one because a lot of people follow this stock. Why is Celsius down 8%, KRIS? What is going on with these guys?
Yeah, they announced a distribution change with Pepsi where they're giving Pepsi more incentives to basically sell their products. So a lot of people are saying, well, that'll negatively impact their profitability. And my thing is, well, it also means that they'll get more access to Pepsi's network. I mean, you want a strong distributor making money and you're incentivizing them to grow your product even more. So I think today's
They're
short-term,
sacrificing profitability for revenue growth, is what you're saying.
I wouldn't say they're, well, first of all, we don't know the terms of the deal, right? It doesn't necessarily
But
mean
why
that
did they wake up this morning and sign this deal? Like, why?
Because KRIS sold. Because KRIS sold. That's how much he had.
no,
He
no,
just said, he
See,
said,
I'm-
because
I'm
because
going on a cruise. I'm getting my pineapple shirt. No, I'm going on the cruise.
because
like what caused them to wake up and do this deal with Pepsi?
well, first of all, no one wakes up and says, yeah, let's do a deal today. No, this is definitely a thought out plan over a long period of time.
Excuse me, Pepsi.
Probably like 6 months to a year in advance, probably. Basically, and this is something that maybe even Pepsi came to them and said, hey, look, you know, we really believe in your product. We want to get you guys in more places. And the thing is, remember, Pepsi is a part owner of Celsius. A
How
lot
much
of
do they
people
own?
keep forgetting that.
How much do they own?
Let me see. Let me see. I don't know off the top of my head, but it's a good amount.
They're like Microsoft.
They made an
49%.
equity. They made an equity investment a while ago, right? So that's one thing. And the key here is going to be, what did Celsius get in return and what did they give up to Pepsi? Unless we really know the entire deal, like what the entire process is, what it is about, then yeah. So right here, new agreement will increase targeted margins and encourage Pepsi to increase Celsius's sales. Yeah. I mean, you want your distributor out there giving you priority in terms of distribution.
But why did the
like
street
Pepsi,
tank get 8%? Why? What? Like,
probably because the margins, probably the margins. Like when Celsius signs something like this, that means that they're going to have to give up a few margins, but it's a give and take. If you can increase your revenues way more than the amount that you lost out on a few points in margin, then who gives a shit? You know, it just means that you have more possibilities to do a lot more TAM. So I think today was an
Why is
overreaction.
it okay when Celsius does it and not okay when Tesla does it?
What do you mean?
Sacrifice margin.
Who's the BYDS Celsius? Who's coming in?
Right? I'm just saying. Like, no, seriously. You just
No
said-
one-
Red Bull.
You just said
No. Hold on.
sometimes
Let
you
me.
sacrifice margin growth for continued revenue growth and market expansion.
And no one is faulting Tesla for that. No one is saying, but the question is, in terms of like valuation, where is Tesla and where is Celsius in terms of like relative growth? I mean, the question that I always have to ask and go back and with the Tesla people is that what is their growth rate now? What is it slowing down to? And with the sacrifice in margins, is everyone else sacrificing margins at the same time? Like, what should Tesla be valued at? Should it be valued like a traditional car company, or should it be valued something way different? You know,
Well, that's a longer conversation, but I think the rub is that I think the rub is that whereas, like, for example, this deal with Celsius and Pepsi, it's understood that they are consciously sacrificing margin for this end goal. And I think that's the big rub with the Tesla example, is that people don't believe that Tesla is doing this.
No, here's the answer. The answer to
They
your question,
believe
Charles,
that
is
they're doing it.
Celsius is growing. Like,
Tesla's still
wow.
growing.
Tesla's growing.
No. I mean, Celsius was growing what, 50%?
Celsius is growing almost triple.
It's also different.
100. It's going
100%.
Tesla's growing 9%, dude. You can't sacrifice margins growing at 9%.
It's complete. They're completely different industries that are.
And by the way,
in the first place, if they're different industries.
And the other thing is,
hold on. They're also growing before. Yeah, go ahead.
Celsius's margins are really high, by the way. I don't know if you know that.
What are they?
It's basically sugar water. It's like 40%. It's like
Okay.
sugar water, dude. It's sugar water. Their gross margins are 80%. Right? So they can sacrifice a few points in margin. You know, versus Tesla.
First of all, I agree with that.
Much harder. Yeah,
and also, they're a $10-20 billion company. What are they worth?
25, something like that.
20.
I mean,
20 billion.
There's a massive difference here already. You know.
Hey, Chris, is Tesla a buy on this dip or no?
I don't think so. I think it could dip a little bit more. I mean, if you're holding on to spreads, just enjoy it. My price target remains unchanged, which is Celsius should be at $100 by 2026. It could be a little bit above that. It could be somewhere close to that. So if your total return from 80 to 20, which is a 20% return in 2 years, which is 10% per year, if that's what you're willing to accept, then that's fine.
Okay. We spoke about Amazon, but this news came just like 30 minutes ago. They invested almost $3 billion into Anthropic, which it makes Claude, which is a LLM. Do you think this is their version of OpenAI? You think they're trying to juice this up to try to compete against ChatGPT? Go ahead, Vitaly.
I mean, yeah, 100%. And everyone knows this is the new AI is the shit. It's going to be the shit for the next couple of years at least. Everybody's got to compete. Amazon is part of this competition. And also, they don't have what Google has, which is Gemini, even though it's still being worked out. And they don't have what Microsoft has. So, of course, they have to do this. They have no choice.
Okay. Any thoughts from anyone else on Anthropic?
I've just
never used this thing.
I've just been very impressed with Amazon's AI lately.
Yeah.
I've been doing I've had it since I've been home a lot. I've been doing a lot of repairs around the house. I've been back and forth on Amazon, buying products, testing products, and returning products. And overall, I'm just super happy with the company.
Do you think they recommend better products to you?
They recommend the recommendations are good. Sometimes they go a little too far. Like after you've purchased something, they're still sending you fine. Okay, you can figure that out. But what I really like is how they sort of coalesce all of the reviews and give you sort of top down a review of the reviews. That's so helpful because there's thousands of reviews, and if you only search the 5-star, you're not going to get the full breadth of the review. So I'm just incredibly impressed with Amazon's AI, and I even use like their AI chats, that chatbot. It's pretty good, man. It's fast. 2-3 in the morning, you're talking as if you're talking to someone.
Well, one of the winners in the AI race that a lot of people, and we spoke about this a while ago, is going to be Amazon, because Amazon has already such a large customer and client base that's already using AWS services. So if you layer on AI on top of all those services, you're just going to increase AWS workloads, which means that you make more money for Amazon. So essentially,
it's just so efficient. There's like Amazon, there's a lot of information that needs to go back and forth, and that AI just helps the information get exactly where it needs to go as fast as possible. So
yeah, I mean that, and on the commercial side, like the actual use cases for AWS just keep growing, growing, and growing. So that's the thing. The benefit is if AI really is a secular tailwind, who are going to be the main beneficiaries? We keep talking about this, but I think it's the most relevant conversation, which is everyone talks about AI and generative AI, but who are going to be the real value generators in all of this? Whenever a new product comes out, everyone's gets hyped about the products, or everyone's buying SMCI. Great if you thought that that's the case, but the question is, who's ultimately going to be able to monetize this whole thing? And I think the major cloud players are the first ones that are going to benefit. The Microsofts, the Googles, and the Amazons of the world are the primary beneficiaries. And then you've got, NVIDIA and everything else being a hardware provider.
Well, Meta,
Intel,
of course, Meta will benefit greatly
and
from
Meta
all this.
well, Meta will benefit from targeting. They don't have the infrastructure.
Oh,
but
we got to talk about that picture.
Did you see his picture this morning?
We got to talk about that shit.
He put on what's his name's jacket.
I gotta show you this picture.
Benson's
Real quick, before I show this picture, I am so happy Vlad did not mention a single thing about AI.
Oh, can I just mention that Meta has paid my dividends, and it was sweet to see.
So Zuck's got 170 million in dividends yesterday.
More than I did, I believe.
Pretty crazy. I'm trying to pull up the picture, but basically the picture is, I'll get it up in a second. Zucks and Jensen in a room. Chris, why do you think they exchanged jackets? Is this a kind of what is the signal they're trying to send here?
I think the signal is very simple. That number one, NVIDIA is everywhere. Number two, NVIDIA is the Regina George of the high school world. So basically, everyone wants to be friends with Regina George. So that's what it is.
VITALY, any thoughts on these guys linking up?
I mean, how much money did Zuckerberg spend?
A couple billion.
He obviously bought a dinner date, okay, with Jensen Huang. So I think it's bound to happen. He's spending a lot of money with the guy.
Carlos?
He's just such a creepy dude. He's just such a weird, awkward, creepy freak dude. I'm sorry. But yeah, when you spend a couple $1 billion, you're going to get to put on the jacket.
It's probably 20 billion.
He's such a fucking creep. I'm sorry.
I mean, I like it. The jacket fits him well. It's nice for me. It's I think the interesting thing about this as well is that like Zucks is going to pay, as Chris was saying, NVIDIA so much more money until they develop their own chips, which I think is the way.
How many years until you think people stop pumping on every one of NVIDIA's earnings? A year? 2 years?
Pumping as in the stock pumping?
Well, yeah, to Chris's point, people are going to start looking downstream and saying, okay,
I think, well, so
selling all these GPUs. Who's
that's a good question. So NVIDIA's been over 900 this whole week. Today it slipped below, and then after hours it closed right at 901. I don't know who the hell's buying this thing at 900, but there are people buying it at 940, 930, 960. I don't know if it sustains 900. Imagine this. Imagine till the end of the year, NVIDIA swings sideways from 850 to 950. That in and of itself would be incredible, because most people are thinking NVIDIA should go back down to like 600-700, like 900 is unsustainable. If it actually stays flat at this level, that's a win.
I showed you the chart. It hit a technical top. Over its 20-year history, it has hit a technical top at around $1,000. It is not surprising they'll go sideways for a bit.
And I'm actually taking one of their courses. I'm taking the Omniverse course.
Oh, perfect.
They're offering those free AI courses now.
Nice.
It's super interesting. They're getting in the software game.
Yeah, I was really happy Vlad did not mention AI yesterday, because it would have been such a like cheap thing to do to like say where it's a special event AI. He's like, he just did not care about AI at all. SBF, or go ahead, Chris. We're going to talk about SBF.
I was going to say regional banks are recovering nicely. Real estate is doing well too. Both sectors that we were talking about for last year, they're doing well now. How's your TFC position now? See?
TFC's
See? This is one of the things that I think everyone here as an investor should eventually learn, which is when the market goes super bearish on one sector, there's always going to be people that get oversold. And it's a good idea to buy companies that get oversold at that level, so that this way you have a lot of room for safety.
But
so
you got to pick the right one. TFC had a lot of good things going behind it.
Yeah. So you really have to pick the right one. And it's the same thing with right now with commercial real estate as well. I know I keep talking about it, but that's because there really is opportunities in the sector that can way outperform the current, even the big tech companies.
Yeah.
Big tech companies, especially depending on which one you're looking at in terms of valuations, could have hit a top, Whereas a lot of real estate and a lot of commercial real estate specifically, and a lot of regional banks still have opportunities for further growth and development in 2024. Same thing with Verizon. I know I keep harping on these things, but there's a lot of great companies that are still on sale right now where you don't have to go bottom picking. But at the same time, just understand that with lower interest rates, a lot of these companies and their business models will be impacted to the upside, and they'll be able to capture much higher profits and do a lot better in terms of valuation. And yeah, I think
that's
right
also,
now is a good time.
That's also Tom Lee's thesis that things are going to expand a lot more into different sectors versus just big tech. The SBF, he gets sentenced tomorrow. How many years do you think he gets?
Why? We'll just drop his ass off in the middle of a fucking shark infested waters, bro. Just why are we trying to keep this guy alive?
We need Chris's wood chipper, and we just start getting the wood chipper going.
No, man. The sharks need to be fed, bro. Let's just drop his ass off in the middle.
I mean, how many?
Like I'm getting tired. Why not? Why give someone life in prison? Like, what's the fucking point at this point? This should just drop Harvey Weinstein, Madoff, this dude. Just drop
Bill
in the middle
Cosby.
of fucking. Yeah, just we found you. You're guilty. The proof is inevitable. Like it's incontrovertible.
Don't you think they suffer more having to live every day in confinement? Like,
have you been bitten by a fucking great
at
white?
90 grand a year?
Yeah, we gotta fucking pay for these people.
It should be like the Hunger Games. If it was like the Hunger Games and on TV, that
right. Every year you put them all in there. One person gets their freedom. Everyone else is dead.
put them all on an island together.
Hey, can we? Okay, for the last couple minutes, can I ask you guys something?
Wait, I was going to ask you guys real quick about Trump's back. Can we do real quick?
Okay, I was gonna ask about DJT and Diddy. We got to talk about Diddy.
Okay, let's do DJT. Let's do DJT. So this thing exploded. I just want to remind everyone, it's a $7.5 billion market cap. Company does $3 million in revenue. Like a company doing $3 million in revenue in Silicon Valley would have to grow 300% year over year to just be valued at like 50 million.
Right.
So Trump's got $4 billion because of this on paper. Do you think this thing crashes and burns, or you think it keeps going up?
When can he sell? That's when it crashes.
Exactly. When can he sell? When's the lockout period? 6 months?
In 6 months. But I was reading the documents. I said on the Market Open yesterday, there's wording where at any moment's notice, the underwriters, EF Hutton, the bank, I believe they're a bank, but they're the underwriting, they can take away the lockup period and he's not subject to it. Like it's very clearly written in the filings.
Well,
now, I don't think he's going to do that, but he could if he wanted to.
Either way, it's September.
That's true. It's September. But do you think people keep buying this to like support him? Like this is a way to support.
I think that's what's happening. I don't think people are buying this on fundamentals. I think absolutely this is a way to say, oh, they pulled some legal shenanigans to try to essentially bankrupt him. So now he's going to pull some financial shenanigans to get out of the legal stuff. It's a way of donating without having any of those limits, right? The $2,500 limits or something. That's what I think's happening. I think a bunch of billionaires are getting behind this and saying, let's pump this thing up, give them some liquidity, and we'll be made whole after the election.
Chris, why are you laughing? The Diddy thing? You're muted.
It's the P. Diddy thing. We'll talk about it.
Bro. Okay, I kind of know what's going on, but I've been kind of out of it. What the heck is going on with this thing?
Essentially, what's being discovered is that a Jeffrey Epstein type or level corruption has been going on in the music industry, and that Diddy has been essentially pulling all the strings in the music industry for years, running a blackmail operation, having people come over to his house, being recorded in compromising positions with young underage girls, prostitutes, having gay sex, et cetera, and using that to essentially blackmail the entire industry to do his bidding.
He is allegedly the Black Epstein, is what you're saying. Allegedly.
Yeah.
Right now. And
as you see on Twitter, it's now they're saying, well, if he's involved, he's tight with Diddy, with Jay-Z, and let it go far enough. They're saying, well, Jay-Z is also tight with Obama. So the idea is that if this goes all the way up the chain, then
do you think it's true? Do you think he's the Black Epstein? He's actually pulling this off?
Well, if you look at what's happening with his business dealings in the background, he got rid of he was partnering like a television network. He's been slowly separating, and basically, I think that television network was the final of his financial ties.
Yep.
So now you see that he's set up to be the fall guy. He's set up to go down. He's like he'll go down.
And
like
didn't he get on a
20
jet
days.
the other day and went to an island or something? He
No,
tried to
his
leave.
jet went to Antigua. But he wasn't on it, and so they're saying that's where they basically got rid of evidence: hard drives, laptops, photos, money, and sent it out there. It's ridiculous.
Andrew's right. Bieber is fucked.
Yeah, dude, Diddy is close to pretty much every
Apparently-
big person in the industry. Diddy has his hand.
Apparently, he did mess around with what's his name.
So just want to let you know, 50 Cent tried to warn you guys, but
He said something to me one time, a long time ago, at Chris Lighty's wedding. He told me to take me shopping. I looked at him like, what'd you just say? Let me move, man, before I do something. You're gonna make me mess up the wedding.
Oh, that's a nice gesture.
Let me get out. No, dude, take me. That's what a guy says to him.
I asked 50 about that. And he said you did the same thing to him. You asked him to take him shopping.
Yeah, I thought he needed some clothes.
I mean, look, I don't know if he's guilty, but the way he's been selling his assets and all this stuff, it kind of feels like something's up there. Like they figured out.
I can't get over this. Like, how do you approach another dude and be like, yo, Amit, let me take you shopping?
Right, like of all the things that you can say, like we were all
Why
in
is this a
Vegas.
big
Never
deal?
once did it occur to me. You know what we should do?
I don't get why that's a big deal. I'd love to go shopping if anyone wants to take me.
Go shopping at Apple. VITALY needs to buy me a Vision Pro.
Shopping for stocks.
So how do you think this ends?
I need a shirt.
I think he goes down, and I think you'll actually see probably one or two other people above him fall. I don't know that it'll get to like Obama or like anybody political, but I'm sure.
Dude, if Jay-Z falls or something, like that's gonna be crazy. Like
Well,
I don't think
it's
Jay-Z
also,
is
it's also not a good look in the election year.
Do you think Jay-Z did nothing wrong in like 30 years?
He probably. I don't know if he, dude. Like,
You see all that people going back through his lyrics?
You think the music industry did nothing wrong in the last 100 years? Oh boy.
yeah, like everything we've believed is just falling apart slowly as a human race, right? Everything we thought was real is like not real. Money's not real, right? Like everything's just like
right. Yeah,
me and
money's not
Carlos
real,
already
it's
knew
not
that
money.
though.
yeah, you guys did. That's why you're fucking Bitcoin trillionaires.
I'm trying. But this and actually speaking of Bitcoin, we'll end it out on the week. It has held the 8-week SMA, so that means that we are likely going higher. And week of April 8th is
dude. MicroStrategy, Chris. I wish you did the MicroStrategy options. You mentioned it. I wish you did it just to be like, fuck you guys, I did it. Like that would have been. It would have been awesome.
I mean, it was a good option.
You did well on Celsius.
It's too expensive. I'm sure that option back then.
It wasn't. Believe it or not, it wasn't that expensive.
What was it? Where were they at? Like $500 back then? That's still an expensive option.
The spread was actually really cheap. I know a few people right now that have turned into an 8. Like me and Amit know a guy. He's at 8 figures now. He called us. It's like, Chris, I fucking have MicroStrategy calls. It's like, congrats, man.
I got to see his portfolio in person. I'm not gonna say who he is, but in person, I got to like literally play at his Robinhood app, and I saw someone up 8 figures, and I'm just like, that's a lot of money.
It's a lot of fucking money.
And he's he made the right calls when it was at $400, $500.
Mm-hmm.
Yeah.
Mm-hmm. Well, we'll see. In a few more weeks, I might be a very, very happy.
You might be up there too.
Oh yeah, and that all that money is gonna make it into Robinhood.
It'll be into Robinhood,
and I'll be wheeling with
you. No. Wait until the 1%.
I'll be wheeling.
Wait until the 1% is ready, because if Bitcoin does really well, you're gonna have a lot of money. You get 1% on top of that. Like that's gonna be incredible.
Yeah. This is the year for it. I mean, I feel like I'm involuntarily being pushed out of my industry, so I have to accelerate my plans to essentially make money from my money. So it'll be a very interesting year for me to try to make money from my money and essentially say, well, I was forced to retire early. So
right.
Yeah.
All right. Thank you, everybody. We'll be back next week. I'll be in New Orleans this weekend, and that'll be fun. I'll be probably talking about it on Twitter, and that's it.
Careful
with
your
money. So from now on, it's going to be Mondays and Thursdays. 9
p.m.
Yep. We did Wednesday this time, but that's only because Amit wasn't going to be here tomorrow. So next week, first episode is Monday night, second episode is Thursday night, and that's what it's going to be going forward. So
yep. All right. Thank you, everybody. Have a good one.
Later.
See you next week.
See you later.
Good night. Bye-bye.